So, have you ever looked at the whole crypto boom and thought, man, I want in on that, but then got totally put off by all the complexity? Well, today we're going to break down how you can get exposure to that world through the good old-fashioned stock market without ever needing a digital wallet. Let's dive in.
Right, so you're curious about crypto. The idea is exciting, but then you hear about digital wallets, private keys, all that technical stuff, and it just feels like a huge headache, right? What if I told you there's a way to get in on the action without ever directly owning a single coin?
Well, the answer is something we can call cryptocurrency stocks. It's actually pretty simple. These are just shares in regular publicly traded companies or funds that are heavily involved in crypto or blockchain. You can buy them right in your brokerage account, just like you would with any other stock. No fuss.
Now, before we get into the 4 big strategies, let's just lay out the key takeaways. First, you can get into the crypto market using stocks and funds you already know. Second, the options are way more diverse than you might think. And third, and this is super important, this market is volatile. You've got to do your homework.
Okay, first up, strategy number 1. We're looking at the infrastructure players. These are the companies that are basically building the roads and bridges for the entire crypto world. They're the backbone of the whole operation. We can really break this down into 3 main groups. You've got the exchanges, think of them as the stock markets for crypto. Then you have the mining companies, the ones actually creating the coins and keeping the network secure. And finally, you have the hardware manufacturers, the folks building the super powerful computers that make all of this possible.
And that leads to one of my favorite investment analogies, especially for those hardware companies. It's like selling shovels during a gold rush. Instead of betting on which single prospector is going to strike gold, you invest in the company that sells the shovels and pickaxes to all of them. It's a broader bet on the growth of the whole industry.
And here are some real-world examples to make it concrete. For exchanges, you've got a company like Coinbase. In the mining space, there's Riot platforms. For hardware, a giant like NVIDIA. And look, even a traditional player like the CME Group is involved, offering crypto futures. It just goes to show you how varied this space really is. All right, on to our second strategy. I like to call these the digital treasuries. We're talking about public companies that have made a very deliberate choice to buy and hold a ton of crypto on their own balance sheets.
Just to give you an idea of what I mean by a ton, check out this number. By the end of 2022, just one company, MicroStrategy, was holding over 132,000 Bitcoin. Their entire game plan is that this digital asset is going to be worth a lot more in the future. So if you own their stock, you're kind of making that same bet.
And MicroStrategy is definitely not the only one. You've got fintech companies like Block, automakers like Tesla, and even a really traditional insurance company like MassMutual getting in on it. But, and this is a big but, take a look at that note for Tesla. They had to report a $204 million loss in 1 year because the value of their crypto went down. It's a pretty stark reminder that this strategy ties you directly to crypto's wild price swing.
Okay, strategy number 3. Here we're shifting gears a bit. We're moving away from crypto as just money, and we're looking at the underlying technology that makes it all work, the blockchain. This strategy is all about investing in companies that are actually using blockchain to build new things.
And the uses for blockchain go way beyond just currency. You've got tech companies selling blockchain solutions to other businesses, e-commerce giants are using it to track products through their supply chains, and big banks are using it to make sending money across borders way faster and cheaper.
And the names on this list might actually surprise you. We're talking about old-school tech giants like IBM, massive retailers like Amazon and Alibaba, and one of the biggest banks in the world, JP Chase. These are not little crypto startups. These are global leaders building blockchain into how they do business.
All right, our 4th and final strategy is for anyone who likes to spread their risk around a bit. This is about investing in professionally managed funds, things you probably already know, like ETFs and mutual funds.
Now, within this world of funds, there's a really important difference you need to get. On one side, you have funds that directly own crypto, like Bitcoin. Their price is going to move right along with the price of Bitcoin. On the other side, you have funds that own a whole basket of crypto-related stocks, like all those companies we've been talking about. Their performance is tied more to how well those businesses are doing.
And here are just a few examples. You can get direct holding ETFs from huge names like Fidelity, or crypto stock ETFs from places like Schwab. There are even mutual funds that use something called futures contracts to track Bitcoin's price. The big point here is that you've got options, and you can pick one that fits your comfort level with risk.
Before we wrap this up, we have to come back to this one crucial point. Crypto is volatile. That doesn't just go away because you're buying a stock.
The risk you take is directly linked to how much a company's success depends on crypto. I mean, an exchange like Coinbase is obviously going to be a much wilder ride than a diversified company like IBM that just happens to have a blockchain division.
So, what's the bottom line? It's that you have options. If dealing with crypto directly seems like too much stress or it's just too complicated, you don't have to miss out entirely. You can get exposure to this space using the same kind of investments you're probably already using.
And that kind of leaves us with this big, interesting question to think about. As more and more of these bridges get built between Wall Street and the crypto world, you have to wonder, where does traditional investing actually end, and where does the new crypto economy begin? The line is definitely getting blurry, and it's going to be fascinating to watch. Thank you for watching. If you got something from this, please like the video and support the channel by clicking on the subscribe button. That really helps us. Thanks again.